Good morning, everyone. I'm Katherine Rooss with TheStreet. I am joined with Alicia Levine, Chief Strategist at BNY Mellon, Jeff Marks, Senior Portfolio Analyst with Action Alerts Plus, and Kevin Curran, RealMoney reporter. We're here to talk to you guys about the midterms and what they mean for your portfolio. Now, Alicia, I want to turn to you first because I think that this is a little bit of a surprise for people. I mean, the Republicans did keep the Senate, but the Democrats won back the House. I'm wondering what you think the market impact could be when it opens later.
So I actually think that the results today are a benign impact for the market. The market had been pricing in this kind of scenario where the Democrats take the House, but not by a huge margin, and that the Republicans keep the Senate and maybe with a 2 to 3 seat boost. So to the extent that this was already priced in, it's pretty benign for the market, and we would expect certain sectors to be rallying today, most particularly healthcare.
Interesting. And Jeff, I know that you've got some healthcare names in the Action Alerts Plus portfolio. What do you expect with the portfolio in general? Are there specific sectors that you think will rally?
Yeah, so I completely agree to you that it was a very consensus result that would happen, but I also think there was a lot of big bets thrown around into some sectors, pricing in a Democratic sweep. So I still expect defense to rally a bit, maybe not as much as the broader market, but I still think that it could rally. A lot of those stocks reported really good results recently, and they've been hammered to the point where I think that they were pricing in at a big budget cut in the future. So I still think that group can rally. Healthcare as well, I think that group was, in this result, you could expect, maybe some pressure in drug pricing, but I think that might have been overblown to a point. And from a broader perspective, I think tech can rally in this environment. I still have some concerns about a slowdown of the global economy, and what you want to bet on during that result would be the ones that have very good secular trends. So it's going to be the ones levered to the cloud, digital payments, things like that. So I'm expecting the Amazons to rally, Salesforce.com's, a couple portfolio names that we have, cybersecurity. So I think those can go up on this result.
And Kevin, one of the things on the ballot that everyone cares about because of recent news is cannabis. And we had Canada legalize cannabis back in October, and now I believe that Michigan is moving towards that. I'm just wondering in general what you're looking at in the cannabis industry.
Yeah, so there's a couple states. Michigan was one of the big ones, of course. Utah, medically, looks like they're in favor of it now. It's still coming through today, but it's interesting to see that a state's represented by Mitt Romney is going to be, jumping into cannabis as well. I don't think people would have said that a couple of years ago. But I think it's a good thing for cannabis investors because they got beaten up pretty badly over the past couple weeks after the euphoria from Canadian legalization came down a bit. So I think this is kind of the next run-up that they can get as sentiment builds towards it. And I think that we're looking at a lot of states where the percentages of polls are over 60-70% towards legalization. It might spread like wildfire.
Political gridlock has historically been good for the market, or so they say. Do you agree with that?
So I do think that gridlock has traditionally been good for the market, and actually the results of this election are pretty much in keeping with the last few elections where essentially we throw the bums out. So every 2 years we turn over, particularly after a presidential election. So I think there's great opportunities for deals here. Despite all the rhetoric, I think there are places where a Democratic House and the administration can agree, whether it's on drug pricing or infrastructure. I think there are the contours of a deal available if each side is willing to do it. So I think that's going to be pretty positive. I also think it's pretty positive for the bond market as well, this particular outcome. So I feel comfortable with this.
Now, why is it so positive for the bond market?
It's good for the bond market because if you had a Republican sweep, if you kept the House and the Senate, you would probably see fiscal boost 2.0. So you would see further tax reductions. You would see the indexing of capital gains to inflation, which is the equivalent of a capital gains tax cut. And so to the extent that you're goosing the economy again on the fiscal side, you have a Fed on the march, and we could see rates moving higher faster. And that's not great for the bond market. So this outcome is actually better for the bond market.
All week, Cramer has been telling me, Jim Cramer that is, that he just loves UNH and J&J right now. Do you agree with that? Is your portfolio looking at those names?
Yeah, I think they're great stocks in the current environment. UNH is one where there might have been concerns from a Democratic sweep, but I think what we were saying is even in the case, it's just a high quality name that's performing so strong right now that, and they've already dropped out of ACA, so it's to a point where if it was a pullback, it'd probably be a buying opportunity. JJ, great too, especially if we do see a type of slowdown in the economy. I don't think the gridlock scenario though is suggests that maybe we'll get some type of resolution on trade. I think if you look at what's going on in Asia this morning, it's not really reflecting that President Trump and President Xi are going to come to terms, at least from an immediate standpoint. So it's just another thing to keep an eye out for.
Now this question is directed to all three of you, and that is, what are you guys looking at in the market throughout the rest of 2018 into 2019? I'm
looking to see whether the 2018 lows can hold. Right now, the rally from the last few weeks has been a little bit tepid and a little uncertain, and you don't see the breadth you'd like to see to be sure of an upward movement. But I think with the election behind us, and essentially it was a market-friendly outcome because the market had already priced it in, I think we move higher into the end of the year. Uncertainty is gone. The presidential agenda, the Trump agenda of deregulation in the financial sector, the energy sector will remain. And in the end, the administration can still get its nominees through a more Republican Senate. And so to the extent that those policies were helpful to the market, we don't see this result changing anything. I'm
thinking that some of the higher growth names kind of come back into favor. Over the past few months, that wasn't the case. And for Action Alerts Plus, we were actually positioning ourselves into more defensive names around the August, September months. Now that the October pullback happened, I think the valuations look a lot more attractive. And again, so I would expect some of the stocks that have a lot of secular themes to them. So that's going to be the cloud, anything that, Jim's Cloud King, so Salesforce.com, Adobe, anything related to the public cloud, hybrid cloud. That's going to be Amazon, your Microsoft. I expect a lot of stocks like that to rally and lead into a strong end of the year.
Yeah, one thing that I'm looking at when we're looking at a gridlock scenario is where bipartisan agreement can come from. I think one thing that I've been looking at a lot recently are drug manufacturers, because HHS Secretary Alex Azar has been pretty firm on saying that they need to rein in drug pricing from companies like Merck or Eli Lilly, which I covered extensively yesterday. And I think that that's an easy platform for the Democrats to come to agreement on. So if Congress and the Senate wants to put forward the idea that, hey, it's not all gridlock all the time, that could be an issue where they come together. And I think that would present problems to drug manufacturers. So I would look at issues where the Democrats and Republicans can agree, because people hate gridlock. And if they can show at some point that it's not all gridlock all the time, those will be the issues they'll come together on.
I'm glad that you bring up the fact that people hate gridlock, because I think that one thing that I've been reading about extensively in these research notes about the midterms is that there is a high possibility of a government shutdown due to the fact that President Trump's administration isn't really known for compromising. And I'm wondering if any of you guys think that that's the possibility, or your thoughts on that.
I think it was so disastrous for the Republicans on the last round. I find it hard to believe that the Democrats are going to pursue this. It was a political disaster, and everybody remembers that. So I don't think it's at stake right here.
All right. Thank you so much, guys, for joining me. You can find all of TheStreet's midterm coverage on TheStreet.com. Thanks, guys.